Home from REA, one of our sponsors here tonight, and they brought a lot of the guests here, so we're so grateful. If you want to say a couple words about REA.
How many people from Chicago REA here? We see okay, good, mixing. So welcome. I had no idea what the hell this was. At all. You know, it was like free booze and drinks. Right? For real estate investor, free booze and drinks is a big deal. So I'm like, hey, you guys got all caught. So thank you for coming, and hopefully what they have to say is lots of that. So, there we go.
Thank you again for helping sponsor tonight. And then we have Anthony Zioli from Freeborn and Peters, who works with two of our companies, both PeerRealty, who I work for, and for Patch of Land.
Hi everybody, I'm Anthony Zioli. I'm a transactional real estate securities attorney with Freeborn and Peters. I can tell you for certain that this actually will be a lot of good information. It's good to see the attendance at these events is getting bigger because it means that a lot more knowledge about this industry is going around, and I think it's going to be, a game changer for a lot of people, especially in real estate development. I think that these guys are doing a great job with their portals, and I think that you're really going to like what they have to say.
So I want to thank both of them so much for their sponsorship here tonight. We couldn't have done it without them. And now I'm going to allow the guests here to introduce themselves and each of their companies.
Hi everyone, I'm Brian Fitton. I'm Patch of Land's CTO and co-founder. I started the company here in Chicago with my brother and the CEO, Jason Fitton. We are one of the first real estate crowdfunding portals out there, homegrown in Chicago and very focused here. And so we're here tonight to make sure that we meet everyone that is in the marketplace here, whether you're a borrower, investor, or just interested in crowdfunding. We want to make sure we talk to you. We're focused on making sure that for our borrowers we can constrict that underwriting and that origination timeline. We understand that you guys need access to capital fast and that you need access to responsible capital. So we use technology to make sure that happens. So we're sort of scaling up origination at the moment, especially in the Chicago area. I urge you to go to patchofland.com/Chicago to download our research report. And if you have any questions about that, give me a call.
My name is Jordan Fishfeld. I'm the CEO and co-founder of PeerRealty. Also kind of bred in Chicago, started like Patch of Land out of 1871's incubation program, moved into a real estate focused accelerator called Elm Spring. Our focus is really bringing investment grade equity real estate product to everyday accredited investors and soon everyday investors. What we do now is basically syndicate out LP positions into the crowd under current regulations, and we're excited about the growth. We definitely, if you're looking to sponsor a commercial, retail, or office property, anywhere from 5 to 50 million in total acquisition costs, we'd love to speak to you. We'd love to meet you. Our investor base is continuously growing. And what we're really excited about is also the collaboration that we're seeing between a lot of the portals. Us really focused on the equity side of the transactions, and then now we're seeing Patch come into the commercial debt space, which is going to really help us quickly and efficiently raise the entire capital stack for large commercial transactions. It's going to be great. Feel free to go to PeerRealty.com and look for projects to invest in, or if you're a sponsor, feel free to send us your deals. We have sign-up templates. George.
My name is Jorge Newbery. I am the founder and CEO of American Homeowner Preservation, and what we do is a little bit different. We purchase pools of delinquent mortgages from banks at big discounts, and we then work with the families to either keep them in their homes if they want to stay. If they don't want to stay, we offer them cash for deeds in lieu to avoid the long and often extended foreclosure process. In some cases, we actually have to foreclose on the properties. We raise our money online through crowdfunding, very similar to Patch of Land and PeerRealty, and we found it a very efficient means to do so. Today, we're restricted to wealthy accredited investors. In the next couple of months, we will actually be able to accept investments from just about anybody, and which we're calling crowdfunding for the 99%. And the minimum investment will be $100, whereas today it's $10,000. So we're hoping to reach as many people as possible who can participate in our socially responsible strategy. Now, seeing that there's a lot of investors here, we do get a lot of REOs. They're around the country right now. I mean, we have a constant inventory of about 100 REOs, a lot of them in Chicago. If it's in Chicago, it's going to be South Side, West Side, Waukegan, Markham, places like that. It's not going to be kind of the north side generally. We have our site, it's ahpinvest.com. So we envision a day that someone buys one of our REOs and gets debt from Patch-A-Land or PeerRealty. That would be newsworthy, and probably will happen at one point.
Oh, yeah.
Thanks, guys. So I just want a couple things. I know people in the back are having a hard time hearing, so if you could speak up as much as possible. And also, just so you know, if you're missing anything now, each of us does have a table at the front, and you can ask questions after or anything you missed, so we're happy to address those. So I think what we're really here to talk about tonight is what is the future of your industries and where do you see this going, and what kind of knowledge can we lay on all the people here?
Yeah, so crowdfunding is here to stay. Online lending is here to stay. We've got a lot of partners in the area, both like the other platforms here, as well as institutional folks, and folks just like you that are looking for more efficient ways to get access to money, to get a secure yield, to do things a little bit more efficiently, to bring the super fragmented world of real estate up to a national level of understanding. We're doing that in partial through technology, but we think that there is opportunity at every part of the cyclical real estate market, and we like to think that we can understand that through technology and our investor preferences and the sponsors who get to talk to at events like this. I think the industry is going to continue to grow exponentially, and you can sort of trust that by looking at the focus. By looking at the focus that the SEC has and that the government as a whole has, and that the size of an event like this demands. So yeah, I think it's going to be a huge shift in how people get money and how people view their online investment portfolios. I think alternative lending is going to work its way into people's portfolios much quicker than a lot of the hedge funds and people think.
Yeah, and I would just kind of piggyback on that. What we're seeing right now in crowdfunding, it's really a fraction of the entire industry of real estate. And more, I think, telling is it's even a smaller fraction of general investors and accredited investors' entire portfolio. And I think for people in this room who love and understand real estate, having a real estate component to your portfolio is paramount and really important, and there's not a lot of ways that you could have done that prior to the passage of the Jobs Act, which Jason was actually instrumental in helping, which we all thank him for. But so what we see at PeerRealty, and I think it's really true throughout the industry, is crowdfunding is doing more than creating efficiencies for current real estate investors and current real estate sponsors, but it's also creating an opportunity for people to truly diversify their portfolio appropriately into the alternative space, be it real estate, be it energy, startup venture, solar. So the growth of crowdfunding generally has been phenomenal for not just those looking for capital, but for those looking to place capital efficiently. I think having 90% of your portfolio right now in public securities is a fairly dangerous position. And if you can alleviate some of that through diversification, specifically into real estate debt, into real estate equity, into real estate mortgage pools, you're better off in an overall portfolio theory. And so that's what crowdfunding can do. It can take the minimum investment that was generally required for a sponsored transaction of, call it 100,000, maybe if you're lucky 50,000, and bringing those minimums down to, I think, five, hopefully soon, $100 soon. So you can now truly balance your portfolio appropriately, and then what we're doing at PeerRealty to kind of take that one step further is actually adding a liquidity option down the line. So we have an alternative trading platform that will allow for investors, when and if circumstances require, to actually sell limited partnership and limited liability interests on a marketplace that that we hope to be efficient enough that that pricing will be appropriate. And again, for us, that's another tool of diversification. If you're investing in a development project and you're excited about the development project, and now you're having to wait, 2 years for development and then 2 years for stabilization. Well, if you can actually sell your position at the end of the development cycle and recycle that capital into a new development project, your portfolio can be truly allocated as it should be. So we're really excited about that opportunity, and would love to talk more about it. But no question, I think crowdfunding and alternative finance is here to stay.
I would add, for those of you who are familiar with Prosper and Lending Club, both of the leading peer-to-peer lending platforms, they're probably 8 or 9 years old right now, and they have exploded in growth. I'm not sure the numbers, but it's billions and billions of dollars that are being transacted on these platforms. And I think in many respects, the real estate crowdfunding platforms are following their lead in growth. And I think the potential for real estate is collateralized versus a lot of the peer-to-peer lending platforms are consumer loans, which are unsecured. I think most people prefer secured collateral. And so I think we look to those and say the potential is there, and we'll simply follow. And liquidity, the ability, which Jordan and others are now working on, to bring, if you invest $10,000, $100,000, $100, and at some point you need the money for some emergency that you didn't anticipate, the ability to liquidate that investment is going to be, I think, extremely helpful to the market, because that's always, we get the concern repeatedly. People say, hey, to get 12%, I have to invest for 5 years, and the reality is they probably don't need the money, but if they do need it, they want to know they can get it. And I think as liquidity in the next 6 to 8 months, we've already started offering it to some limited extent, but as that becomes commonplace and readily available, it's going to be a huge boost for the industry.
Yeah, and I think if you kind of take the Prosper and Lending Club model and recognize where the disruption occurred, it was really taking investors who would rather have the direct lend to the consumer over having it sit in the bank and letting the bank go and lend it to those same consumers. And that's pretty much exactly what you do, right?
Yeah, absolutely. Yeah, it's getting the debt straight out to the investors. They own the note. It's secured by the real estate at hand, sometimes a personal guarantee, and so it's a way to get high yield. You can keep it on the platform, so as soon as you get a distribution, you can put it back into a deal. You can withdraw it for free. So it looks like a savings account, but it's secured by real estate, and it adds that diversification, as Jordan was talking about, to your portfolio.
And you can diversify. Challengingly today, being that we are, I think all of us are 506c, which requires that we have to verify that investors are accredited in order to invest. So many times we'll get a balance sheet, someone saying, this is why I'm worth $1 million or more, and on there, PeerRealty, Patch of Land, Realty Mogul, Realty Shares, AHP, you'll see all these different platforms. Some people, this has become a primary investment strategy, and what they're doing is they're diversifying amongst the different platforms. And it makes sense. I mean, the reality is some of these deals probably will go bad at some point. I don't think there's a deal that's gone bad yet, but there will be some. And just as on the peer-to-peer lending platforms, there have been consumer loans certainly in the single digits, maybe even touching 10% at some points in the cycle of defaulted loans, and that will happen here. But to the extent you're diversified across 10 or 20 or 100 different investments at small amounts, you take one loss, your overall portfolio will generally perform very well.
Well, exactly, and I think that's the value that we get to add to the market, right? What we saw in the inefficiencies that we were looking to eliminate was to invest in real estate, which we all, at least in this room, can agree is a necessary part of your investment portfolio. To invest in real estate, you'd have to do it for $50,000 or $100,000. And if you're investing appropriately, as recommended by advisors, that means you have to have about $1 million in investments, because real estate should only be 10% of your overall investment portfolio. So that's a lot bigger of an investment portfolio than you necessarily should need to get the same type of diversification. So now we can actually, with somebody who has a $100,000 investment account, we can have them diversified across 2 deals, and hopefully soon, many deals, when we can bring those minimums down. So again, to us, it's definitely a creation of efficiencies when it goes to finding capital and sourcing capital, and placing capital. And then also, I think we've been at PeerRealty very focused on creating that access and transparency and efficiency and placing capital from the investor's point of view. And we've done that, through focusing on the types of deals we focus on, and really, when investors come in and they're looking for a debt product, we send them to Patch. That's an appropriate diversification tool. So for us, this is the new way, and I think the way. I don't even think it should be a new way. The way to truly diversify your portfolio into real estate. And to diversify your equity base for the real estate developers in here. I think that's a new thing we're seeing. When you don't have to rely on your one high net worth individual to decide whether or not it's okay to do a deal, because you have 13,000 investors who are all supporting everything you do. That can become very valuable. You can focus on finding the deals that you want to do and not necessarily appeasing the whim of a single high net worth individual. Yeah.
I mean, I imagine both for the investors in the room who are relying on friends and family who are hard money who are providing you investing in your projects. And I mean, I used to do this, and I would have a running list of people who the money that they had available was, hey, I'm waiting on this deal to close. As soon as it closes, I can give you the $100,000. But then there'd be a delay in the deal, and hey, I'm trying to close my deal. So this kind of gives you a much greater base of investors to fund your projects. And I think that creates a lot of value, especially for those of you who are buying distressed deals where timing is often a big factor, sometimes even more important than price, since your ability to close in a hurry and the ability to get that cash is essential.
Hey guys, can I ask a question?
Yeah.
So, can you guys take a case study and break it down? Let's just take a house. Let's say somebody's buying a 2-unit, right? 2 flat. Because for a lot of people who are seasoned investors, it's going to be easy to approach you guys and figure out, well, what is debt, what is equity. For a lot of investors that have 4, 5, 6 properties, do something else for a living, they don't talk the lingo you guys talk, right?
Fair.
So let's break it down in a way where they're buying a 2-unit property, $250,000. I think it's a great deal. I think it's worth $400. I'm going to put $50 into it. So I have an equity position of about $100,000 going in as I buy the property, right? So can you guys talk through? Am I going to go to Patch Land? Am I going to go to PeerRealty? So I'm the sponsor, or I'm the investor, quote unquote, in our REIA lingo, right? Where do I start? What's the first step?
I think your first step would definitely be to probably call Patch of Land on this one. It seems like, are you doing 2 flats?
Well, yeah, we absolutely do 2 flats. I think it depends on also what you want to do with the property.
Let's say I want to keep it for long term, but I need I basically need the capital on the front end for purchase and rehab. How much skin do I have to have in the game? How much do you guys come in with? What does the deal look like?
Yeah, so let's assume that it's a fix and flip. What we'll do is by what we've been able to develop internally, we can close that deal. As George said, people are looking for these deals to close super fast, right? And so we can close that deal in a matter of days. We're going to give you debt, and so the debt has no prepayment penalty, and so you can refi out at any time. If it's a buy and hold, we usually write 1 to 2 year notes. Our investors' appetite is for those, and we do monthly interest payments out to them. In terms of down payment, we're looking for about 20%, depending on the project itself, our investors' preferences, our own underwriting criteria, your experience. If you've done business with us before, we're flexible on the down payment. But you're going to get a debt note from us that, again, is no prepayment penalty. You're going to start fixing up that property, and then you'll probably look at refining out. If you want to hold it, you'll probably go to my partner here.
Yeah, so for us, the process is fairly similar on the equity side, but we deal in larger commercial transactions. So to talk about a deal we have right now, it's a portfolio of senior housing facilities throughout the Midwest. We're coming in on the equity position. My head of investments can actually remind me the entire equity position right now.
Sure. The total equity is about $2.5 million. The sponsors are bringing about 5% of the equity. PeerRealty was brought in to raise about $1 million of the $2.5 million. In a matter of 10 days, we've gotten to just under $2 million of commitments on the equity. That one's basically done at this point, so we need to get some more deals up and running.
Yeah. So on that side, you're coming in on the investor side, you're really coming in on the limited partner. So the actual deal itself will pay preferred return to the investors, which will accrue throughout the life of the deal. And then above that, there'll be some sort of split. So we actually closed the deal yesterday. It's a commercial center. It's paying an 8 pref with a 70-30 split thereafter. So every investor gets 8% current. And then once all the capital is returned, they're going to get 70% of all of that capital. So a traditional kind of private equity, limited partner, general partner relationship. The sponsor would come to us really when he's locking up the deal. So if you're out there looking for these types of transactions, pretty much as you're putting your LOI into the seller, you really want to contact us. We can help you find the debt. It's through Patch or one of the other lender relationships we have, and then we'll raise the capital, the equity capital for you through the platform. And that process generally takes anywhere from 25 to 40 days. So it's a little bit more protracted, but it's an equity investment, and there's a lot of additional diligence involved.
So just to take that a step forward, I brought a deal, right? 250 purchase, 50 rehab. I think I can turn it for 400.
Yeah.
Who does the due diligence on the deal?
So on the sponsor side, you would obviously do the initial due diligence. My assumption is Patch actually does their due diligence on the asset as a first position lender. So you can speak to that.
Yeah, we do everything you would expect for a commercial deal to be underwritten. What we do internally is we again use the technology to put everything in front of our team and everything in front of our platform investors so they can be comfortable with the deal. But yeah, we're gonna do comprehensive due diligence on the property and market, expectations there, your history, all that good stuff. And we're gonna put that in front of our team who come from all the different mortgage houses. They have a pretty good level of experience with identifying these deals. We do that sort of 100,000 to 5 million. So we are the smaller cap stuff, and debt is, as Jordan said, it's a bit easier to underwrite. And so we'll do that initial due diligence, but it just helps to come to us because you can get that initial package of due diligence, and then you can pick that up and hand it over. And we put our listings and that underwriting data transparently onto the site, everything that we can.
And is it credit driven or is it asset and a blend of credit for the sponsor's perspective?
It's based on about 4 dozen different data sources and 4,000 different data points, and so we look at everything, and that's why we can close so fast, why we can underwrite so fast. We don't care if you don't have any 100 credit score. Let me put it that way.
Yeah, I think that's what.
Yes.
So appraisals.
Yeah, we do full third-party appraisals.
And I think that's what we're seeing with a lot of the crowdfunding platforms is an ability to efficiently use technology to speed up a lot of the processes. So, Patch can do that. They can take, 400 data points?
4,000.
4,000 data points and underwrite a debt transaction in days. We actually can take all of the data points that we see, all of the same debt data points that we see, and then also efficiently get feedback from all of our investors to know whether this deal is what market will expect as far as returns. So what we're seeing as a result is sponsors can actually use us to find what the current market is for equity in a lot of ways. So sometimes we're seeing it come in at about 50 to 100 basis points below expectations. Sometimes the sponsor thinks this is a home run deal with no risk, and the investors won't touch it for less than a 30. And we can kind of get that immediate feedback, and that's, I think, what's very valuable on top of this access to equity is access to that type of information.
Will you guys work with IRA funds?
Yeah, great question. I don't know, you guys do.
Yeah, we work with SDIRAs. We have a couple partnerships in the sort of stack right now that are going to become more formalized and we'll announce soon. Right now you can, and we'll take care of the paperwork for you. It is a little bit of a manual process just because of having to work with some of the IRAs. They're not quite set up enough to do it electronically and automated. But we're working with a few of the big names to bring that sort of trust and that automation.
Yeah, and I think at Peer 2 we've started the process of automating self-directed IRAs directly from your self-directed account into the PeerRealty platform. So my understanding is you actually don't need to do much offline. We're still some of the manual nonsense, I'll call it. But again, to me, that's probably the most appropriate way to use self-directed money into real estate, specifically for long-term holds. If you're appropriately diversified, getting tax favored returns in dollars that you're not expecting to see for 15, 20 years. This is probably one of the most exciting new ways to invest in alternatives, which wasn't available before. Yeah.
So do you guys allow second mortgages? With Patch of Land being the first and bringing in a private?
Yeah, we
second
do.
with equity?
We do first. We're going to start offering seconds on a sort of select basis. But yeah, usually it's first for us.
Well, yeah, no, what I'm saying, I can bring in a second.
Yes. Yeah.
To bring that 20%.
Yeah.
Let me add a little bit on the duplex question. I'll give you a quick story. One of the largest originators in the country called us about 2.5 months ago and said, hey, we originated a loan in 2013, South Winchester, south side of Chicago, great property, it's a duplex, and first payment default. And so now here it is, 18 months later, they had to buy it back, they needed to sell it, and so we bought it. Property was worth about $150. We bought the loan for a significant discount, sent a letter to the homeowner saying, what do you want to do? And he said, hey, I don't want the property anymore. We gave him $2,000 for a deed in lieu of foreclosure. So now, just last week, we own that duplex, and we want to sell it. There's a Section 8 tenant in one, the other one is vacant, they can abort it, but it's a nice looking property. So that is kind of the ecosystem. Now, bear in mind, we pay our investors 9 to 12% per month, so our goal is to sell that property as fast as possible. And so ideally, if someone here had interest, we would try and sell it, and ideally, I mean, it's, for a change, it's one of the relatively larger values that could actually be funded by Patch of Land, which would be kind of nice.
Yeah, so we have about another minute or so that we're going to be up here. If anybody has any specific questions, you do.
What are some of the investment benefits of investing in real estate crowdfunding versus REITs?
Yeah, great question. I think the question is, what is the benefit of investing in real estate crowdfunding versus a REIT, real estate investment trust? So I answer that in two parts, and then I'll kind of jump into it. But for us, the initial benefit as compared to public REITs is you're gaining true diversification outside of the public securities market. So public REITs right now function more in line with public securities than they do with direct investment in real estate. And so by investing directly into real estate, you're getting that diversification that doesn't exist in a REIT. So that's first. The second benefit that we see is you're investing directly into real estate, and so you're gaining a lot of the tax benefits related to depreciation. What's that? And sorry. So the tax benefits related to real estate, and then really a lot of the fees related to REITs are fairly substantial, and so we're able to do that at a far more efficient rate. And then finally, and what I think is going to be fantastic is, as compared to a REIT, other than a single asset REIT, you get to select the deal that you want to be in. So if you want to invest in your neighborhood or into a specific property, that's your right. In a REIT, it's really up to the managers. So that's, all those values together, I think that there's definitely a major benefit to direct investment through crowdfunding as opposed to a REIT.
Yeah, Jordan hit all the points. The thing that I'll lead on a little bit more though is that people really like the specificity. So they like knowing what deal they're getting into. They like reading the narrative. They like reading the capital stack. They like sort of keeping track of that individual investment. And you develop tools to let them sort of dive in as specific as they want, or pull back a little bit and see a more list view. But they have the ability to do that with not so much with a REIT.
Consider with a REIT, you have a professional, let's say Wall Street manager, and here you become the manager of your portfolio, and those professional Wall Street managers certainly charge a lot, and I think here you take away, none of the platforms are charging any fees to the investors. The fees are usually borne by the developers or the rehabbers that are borrowing the money, and so it generally should work as a much more efficient vehicle for investors and deliver a high return.
Data that points that returns on crowdfunding platform.
Yeah, I mean, our industry is only 18 to 24 months old, I mean, yeah. I think it's out there. I think you guys just did a report on it. I mean,
the Chicago report actually includes that, and I think that there's a more general report about it. If you want to do your own, we have an API you can consume and do all the data analysis you want all day long.
Yeah.
Is there any role for institutional investors in your platform?
Is there a role for institutional investors in the platforms? I'm going to start with you because you just announced today.
Yeah, we had our first. So we've been institutional investors. Everyone here is they all have money. They're looking to invest and whatnot. So we embarked in January on bringing in institutional capital in, and it took us until last month, July 24th, we finally had our first institutional investor. So there's no question there's a role for institutional investors to play. They invested right alongside our high net worth investors. And but I think, as we've seen with the peer-to-peer lending platforms, the vast amount of that, or the majority of the growth, has been attributed to institutional investor dollars. And I think the same thing, it's already happening I mean, Patch and Land, you've had some institutional capital invested in the offerings already?
Yeah, we have institutional investors both in the back end to help us originate more, which we're really glad to have. And we have people on the institutional side who are investing fractionally in right beside the retail guys, and they really like that. They like sort of following the retail. Actually, they like seeing the preference, and they're glad to invest fractionally, which is kind of new.
Yeah, and we're seeing it too. Obviously, we have a fairly full capital stack for a lot of our transactions, which could include some of the institutional mezz lenders on the mezz piece. Obviously, first position debt on all of our deals come from major banking institutions. And then for some of our deals coming up, we'll actually be sitting in a sidecar pari passu to institutional GPs, and they're actually bringing retail investors alongside. So no question, I think there's room for institutional investors in the business. I think all of us are very aware of the need to keep a space for retail. I think the data that we receive from retail investors is valuable and necessary. So I would doubt any one of us is looking to replace retail with institutional capital in full, but it does allow us to grow a little bit faster and to take down more of the more appropriate deals. And then I think you have a question, and then we're going to end it up.
Okay, great. Two things. First question, it's hard to hear you back there, so as a byproduct, you're having a complete background conversation. So, right. But my question is, will you record it, or?
Are any of these recorded?
Okay. Oh, well.
Maybe, yeah.
Okay. Secondly, in terms of rehabbers or folks who want to put projects on your platform, do you have support for how to build a campaign? Crowdfunding, you typically need support on how to build your campaign so that you can raise the funds. So do you offer those kinds of services?
So for Patch, you go talk to that.
Yeah. So we fund you. The narrative, all the due diligence, the capital stack, and all the reports and stuff that you see there are generated from us. And so you're certainly helping us. You're writing the bio. You're letting us know what you're going to do with the property. In terms of for your own benefit, if you're getting into this, maybe you have a mentor who's very experienced and he's helping you, and maybe he's on the loan as well. We do provide borrower resources. So we're actually going to start launching some more significant assets for borrowers here, but we'll help you sort of look at, even down to the lamp that's going to go in the front yard, how much value that'll add to the sales price. So we're going to be focusing on this.
And I think of note there for Patch is what he mentioned is they actually fund the deal first and then crowdfund their capital back out of the transaction. So a lot of the crowdfunding risk is borne by the portals themselves. You guys close on your loan transactions, close on your debt transactions, and then crowdfund their position out of the deal. For those who are looking to actually use a platform and run your own campaign, there are portals out there that will allow you to go direct. And in those cases, you will need a consultant, and you'll need to spend, and you're taking the full risk. And then those, maybe it's worth it, and maybe you should come to us. Those are the ways that you can raise capital. Really, really excited to have everybody here. Brian's going to be by his table. George will be by his table. we'll be by our table at PeerRealty, and feel free to come up, ask any questions. And we're looking forward to for you guys to come into Chicago. It's gonna be great. Yeah. Thanks so much.
That's for you today.
All right, great. Thank you very much, Amy.